Okay, folks, welcome to Best Stock Charts for the coming week. We're also going to review a number of symbols that members submitted for me to review on video. Members immediately following Best Stock Charts, we're going to segue into the market pulse check and then a review of our holdings. If you're not currently a member, please sign up for the 14-day free trial offer. And you can also get some free video lessons if you enter your email address. We do not spam. All right, so let's kick things off with how was our week last week? Well, the great part about trading is that I was able to travel, enjoyed a great time with my family, and we made a killing. We did quite well, and we were trading NUGT, the Direction Bull ETF. Not for the faint of heart, not for those who are risk adverse. There is quite a bit of volatility, but I've been discussing NUGT. I've been discussing gold, silver for months now. You can go back to my 2016, the year ahead forecast, which I submitted back in December. And I said there was going to be a massive rally. I was watching a breakout in the gold and gold mining names. We have been enjoying this entire move higher. We booked some profits on Friday. I didn't capture the entire move and close near the high. I didn't get that, but that's not our goal. We did extremely well. We are looking to get back long of NUGT. It's treated us extremely well so far in 2016. I think it's going a heck of a lot higher. Now, when you take a look at the chart as it stands right now, we're a bit extended. This green line here is the 3 standard deviation Bollinger Band. It's overbought. Can it move higher? Sure. The street now owns NUGT. Keep in mind what's going on globally. You have the Japanese, which have zero interest rate policy now. Interactive Brokers over in Japan, which is an American company, is now charging 0.25 percentage point to keep your money in a money market. Europe, zero interest rates. What are they in demand of? Gold. They are ordering a ton of gold. They are also ordering a ton of safes because nobody wants to put their money in the bank. They're just going to put it in the safe. So gold is in fuego right now. It is hot. And the street really hasn't appreciated the fact that the gold and gold mining names have taken on a life of their own. They're just beginning to now. Goldman Sachs still has yet to rescind their sell short call, which they issued back in March. And I made a video about that. That call was bad, very bad. They said to short back here. I said to buy it. If you listen to me versus Goldman Sachs, you would have made a ton of cash and you would have paid a heck of a lot less in fees. Now, when you take a look at the RSI is at 74.23. I think it moves higher. Volume, under institutional accumulation. Ultimate oscillator, higher lows. Double bottom setup on Stokes. That all being said, I think that we're going to get a pullback fairly soon. Because this upper band of resistance, we're now trading out of this ascending wedge formation. It'll have to retest this breakout point. That's a good thing. That's where we jump back in once again on NUGT, and we'll be doing so very aggressively. My team and I send out trade alerts on all of our trades on both the buy and on the sell. So NUGT, it could quite possibly spike higher by $10 on Monday morning. Don't be shocked. But it's going to get a pullback fairly soon, and that's your opportunity to buy more or open up a position. Now, what's causing the rally in commodities? We need to talk about the U.S. dollar. That's what's causing the rally in commodities. Nobody has faith in the U.S. dollar, and I'm going to be going over this in greater detail on Market Pulse Check with members. The dollar is breaking down and breaking down hard. It broke significant support last week and is now just hanging on by a thread. I think that we will probably get a rally next week in the dollar. It will be short-lived. Commodities will pull back, but I believe that the dollar is done. it will roll over and roll over hard. Economic data that was released last week, durable goods, horrible. Horrible economic data. GDP, which they expected to come in at 3% going into the year for 2016. The first quarter was, 0.5%? Good luck making up the spread between 0.5% and 3% between now and the end of 2016. That's not going to happen. So the world is finally waking up to the fact that the U.S. economy is doing very, very poorly, and it's reflected now in the U.S. dollar. So right now we're trading down below the third standard deviation Bollinger Band. We closed down on big down volume. Now, while we could still make lower lows, it's not going to stay below this 3 standard deviation Bollinger Band all that long. Normally when that happens, like it did back here, like it did back here, like it did back here, you get a quick counter trend move higher. But I think that unlike these past rallies, I think that this one's even going to be more short-lived than the others. I think that we'll probably make it up to this upper band of resistance, and then we're going to fail and roll over. Any pullback in commodities, that's your opportunity to buy gold, buy silver. LIT, Global Lithium. I never heard of this one, to be honest with you. This is one of my members that submitted it. We're in a bull flag formation. Now, while that sounds like a bullish call, and it is for the most part, it's an orderly pullback. I'm concerned about rising down volume. I'm concerned about ultimate oscillator breaking down. When would I stick my toe in the water and begin buying shares? Well, if it touches the lower band of this support level and bounces off of it, I would buy it there. I would open up a small position. I would then begin to add on a rally up and through this upper band of resistance. That's how I would play it. So LIT looking good. Uptrend is clear and defined. It's moving higher. ERX. This is the Direxion Energy Bull ETF. I have some issues with the energy complex. I think that it's rallying because oil is rallying, because the dollar is weak. And I don't think it's because of demand. I think there's far too much of a glut of oil. OPEC is completely in disarray. So I think that by looking at this chart, this is a weekly chart, if I didn't mention that, we rallied up and into the declining 50-period moving average. I think we're going to get a pullback. And on that pullback, if it's orderly, like it was back here, a bull flag formation, as soon as you see that bullish key reversal, that signals the end of that bull flag formation, and then you'll expect to see a resumption of the uptrend. To a daily chart, here you can already see the shares already flagging out. They were a bit overbought. They were trading into the 2 standard deviation Bollinger Band. They've since pulled back. I think that you could see a further pullback. Volume rose on Friday as opposed to Thursday. So you have some profit takers moving in. Stokes are overbought. MACD beginning to weaken. I think that you could see a further pullback on the ERX. But on that pullback, you can begin to nibble on shares because I think that they may just move higher. I would become aggressive on a continuation breakout of the bull flag formation. I would not be aggressive on buying the pullback because if my thesis is right and demand for crude is not there and it's only rallying because of the weak US dollar, well then, this rally may not last. But right now, it looks good. We're in wait and see mode. Can it pull back and then break out? That's the key. We want to buy on strength. All right, the BZQ. This puts you short of Brazil. Now, this is a weekly chart, and on a weekly basis, it's touching the lower band of support. I can't buy it. I just can't buy it. Why can't I buy it? It's because the U.S. dollar is weak. When the U.S. dollar is weak, it's bullish for emerging markets. If the dollar does what I expect, short-term rally, then begins to break down once again, you're going to see the BZQ get hammered like a baby seal. So while early this week, we know, I just went over the UUP, we know that the dollar is oversold. We might get a quick rally. That means you might get a quick rally in the BZQ, but I think that it will fail. And when we take a look at the next symbol I wanted to discuss, which is the BRZU, this puts you long, leverage ETF putting you long of Brazil. So I just went over the short Brazil ETF. Now we're going to talk about the long Brazil ETF. When you take a look at this candlestick last week, you cannot short this ETF. Why? Because it closed above resistance. It closed above its 50-period moving average. It flashed a bullish key reversal, meaning they tried to take it down, they reversed it, and they closed it at the highs of the week. Very, very bullish price action. And if the dollar continues, you're going to see the BRZU continue to move higher. RSI trending higher, looking good. Volume was a bit weak last week, I will grant that, but I bet you if we see a continuation breakout next week, you're going to see volume move higher. Why is that? It's because cash in the United States is going to be best put to use outside of the United States in the emerging markets. The U.S. stock market, I'm going to go into this with members on the market pulse check immediately following best stock charts. It's breaking down. It's breaking down hard. So I think that the U.S. stock market is done. The goose is cooked. I think that we're going to see a resumption of the downtrend, which I predicted in December. I think that breakdown will continue. If that occurs, I believe that you're going to see a rally in emerging markets because the dollar will drop. So BRZU, I prefer over the BZQ. In essence, I want to be long of Brazil. The DBC, Commodity Tracking Index, it's going higher. What can I say? The shares flashed a bull flag breakout last week. Strong move higher. Might we get a pullback? Sure. I think that pullback is to be bought. Volume on Friday, very, very strong. Be careful of this, though. We're seeing a lower high on Ultimate Oscillator, which tells me that we may, just may, get a pullback early next week. And again, if you get a nice bull flag formation, a nice orderly pullback, you want to begin to nibble on shares, finish your buying on a breakout and a resumption of the uptrend. DBC looking good. Seadrill, weekly chart. We talked about this one back here. It broke out, moved higher, pulled back. Then 3 weeks again, it popped its head above resistance, and it's been off to the races ever since. Now, we are near the 2 standard deviation Bollinger Band in green. We do have topping action. That means you have some profit takers moving in. You also have some buyers from back here who survived this move down. They just want their money back. So you have some overhead supply. So do I think it's going to be a straight shot higher for Seadrill? I doubt it. Not if my thesis on the energy sector holds up. I think that we might see a pause, a consolidation, and then perhaps a move higher, and that's a good thing. Higher high on RSI, good stuff. No breakout yet. Volume, spectacular. Under institutional accumulation. This is not a short squeeze. Higher low on Stokes. The indicators look strong. Let's go to a daily chart. All right, so on Thursday we had topping action, closed down, but on Friday it powered through. Hollow candlestick. I don't like hollow candlesticks, these black-filled candlesticks near the highs of a trading range. We'll probably get a pullback. That's fine. Allow it to pull back. That's your opportunity to buy. Volume was good on Friday. Stokes are looking good. So the daily chart looks good. I think you might get a pullback. Would I be shocked if it proceeded higher? No. The next chart up, JNK. You may be asking, why are you talking about the JNK as a dollar-related ETF? The reason is that if the dollar strengthens by some act of God, you're going to see the price of oil drop. You'll see the oil producers drop, and JNK will drop as well. So JNK, for the most part, looks pretty good. The rally is strong. We had a bull flag formation, continuation breakout. This is what you want to see in a bull market. So JNK looks strong. A little bit of resistance on Thursday. We had a key reversal, bullish key reversal on Friday. Stokes are lowering a little bit. They're rolling over. But the chart for the most part looks good. Good volume on Friday. Let's take a look at an intraday chart. We'll use a 2-hour chart. All right, so 2-hour chart, you can see nice strong uptrend, getting a little bit long in the tooth. We may get a pullback soon, but right now we continue to flash bull flag formations. When you get these, you need to buy that breakout until, of course, that trade doesn't work anymore and it corrects. I think that there's still some fuel left in the tank on this rally. So JNK is looking good. Good volume into the close on Friday. So JNK bullish. But if, as I expect, the dollar rallies for a day or so this coming week, you may see some pressure on the JNK. That may be that consolidation that you'll be looking for a long trade. You buy on the breakout. Let it pull back, buy on the breakout. Gold Corp. All right, I love it. I mean, what can I say? It's going higher. It's going a lot higher. But it may pull back. Why do I say that? It's because we were in a trading range, an orderly uptrend, but then we just started going parabolic. If anybody's followed my videos in the past, you'll know that parabolic moves higher, which simply defy logic, that there's no way that this can continue. Guess what? It can continue. It can move a lot higher and stay overbought for an extended period of time. That being said, what I'd be looking for to enter a trade here is a pullback and a retest of this breakout point. At, let's call it $19 per share. Now, can you trade it as a momentum stock? Sure. We'll probably get an early morning pullback. Let's go to an intraday chart. Use a 30-minute chart. We'll probably get an early morning pullback because we did leave the day overbought 78.74 on RSI, and it's beginning to decline a bit. Good close near the highs of the day. But ideally, here's what you want to happen. A quick pullback, a filling of this gap, either at $19.17 or at $19 per share. And then you could begin to accumulate a position. Never jump in all at once. So the chart of GG is looking good. I prefer the NUGT, the Direxion leveraged ETF, which puts you long of the gold mining names. I already went over that. If you just jump to the chart of GG, go back, check out my analysis of Nugget, NUGT. I've been bullish on that since 2015, and it's treated us very well. We booked profits last week. We'll be looking to get back in this coming week. And again, my team and I will get alerts out on both the buy and on the sell of all stocks. The GDX, very similar to GG, right? It was trading in a ascending uptrend channel. That's redundant, sorry. We broke out above the upper band of resistance. We're beginning to go parabolic now. What we'd want to see is a pullback and a retest of the breakout point. And if we close down below this lower band of support, and this goes for GG as well, if we close back down below this lower band of support, we'll probably come back down and retest the lower band. Same thing holds for the GDX. If we pull back and close back down below this prior upper band of resistance, well then expect a retrace down to this lower band of support. It's all good. It's just getting a little bit ahead of itself right now. But I still think it can be bought. But let it pull back. Unless you're a momentum trader, you know how to trade these shares, you can use a trailing stop loss order to take you out, then wait for the pullback. And one thing that these stocks are not right now, they are not shorts. If you decide to short these names, you stand to have your face ripped off. Please do not short these names. I don't care how overbought they look right now. It's nothing in comparison to how overbought they can become. Because we're seeing fear set in globally, demand for gold rising. So don't get ahead of this freight train by trying to short it. Okay, UVXY. We're going to talk volatility. I'm going to go over the UVXY and the TVIX. The UVXY puts you long of volatility. It puts you long of the VIX. So if you're bearish on the S&P 500, as I am, then you should be bullish on the UVXY, which I am. Now, take note that we have been in a seriously ugly downtrend channel. We are now attempting to break out above the upper band of resistance. I think that we get it this coming week. Volume, very, very high last week. Institutional accumulation. These are longs that are hedging their position with volatility. Stokes are like a coiled spring. Now, taking a look at the S&P 500, because if you're long of the UVXY, you must be bearish on the S&P 500. Note how the S&P 500 in black line chart here is rolling over. And if you take a look at the daily chart, you'll see that the S&P 500 broke down below prior support. So we have a lower high and a confirmation breakdown because we closed down below the lows seen on April the 22nd, thereabouts. So confirmation breakdown. I think the new downtrend is beginning. And we saw a rally on Friday on the UVXY. Sellers moved in. They took some profits. Or those who simply don't believe that this rally is going to be for real on the UVXY, they just sold strength because they've been clobbered like baby seals throughout this downtrend. Volume was strong. Now, taking a look at the TVIX, which puts you twice long of volatility. It is a leveraged ETF. I'm seeing the same thing here. We're hugging the lower band of support. I am bearish on the S&P 500, therefore bullish on the TVIX. Strong up volume last week under institutional accumulation. Daily chart. They rallied it up and into resistance. It closed, let's call it at resistance, okay? We may get a quick pullback. We may trade above it on Monday morning. Not quite sure. But the price action on the S&P 500 last week was very bearish. I'm predicting that we are going to see a rally in volatility. Therefore, TVIX should move higher. Price line. I discussed this several weeks ago as a member stock chart request. It continues to be a stock chart request. I was talking about, at that point in time, a bull flag formation. Expect a breakout. We got it. However, we haven't been able to capitalize on the move higher. Meaning, no continuation breakout. You still have resistance above. Would I be a buyer? No, because we're right at resistance. I am not bullish on this market. I am very bearish on it. The triple Qs are rolling over. So all of these high beta names are beginning to weaken, except for Facebook and Amazon, which reported good earnings. And the current status of their rallies are in a bit of question right now. Will they be able to continue to move higher in the face of a market that's continuing to move lower simply because of earnings? Yes, earnings are important, but they do have a price tag on them that reflects what should be strong earnings power. So PCLN, I'm concerned about. Let's take a look at the daily chart. Yeah, they tried to rally it on Friday. It failed. Sellers moved in. You need to see a close above 1370. If you close above 1370, that gives you enough room to be confident that the shares could move higher. Until you get that, I would avoid the shares. This market is just getting weak and weaker, and I would avoid shares unless it closed above 1370 on PCLN. Stokes are attempting to move higher. Not enough to make me want to buy it now, though. We do not want to buy into resistance. We want to buy on the fact. And that fact is it has the strength to rally up and through resistance and, more importantly, close there. Okay, the next chart up is Workhorse Group, symbol WKHS. We have a weekly chart up. What you're seeing is a really nice uptrend channel. respects the upper band of the rising uptrend channel, and it's respecting the lower band. Last week, we flashed a bullish key reversal off the lower band of support. Volume was very, very strong. The ultimate oscillator, higher lows, setting up nicely at the 50 level. So I think that we may get a continuation move higher. And the only reason why I'm using May is I'm concerned about the lower highs on the stochastics, but that's a minor issue. Same thing with RSI, lower highs. As long as they remain above 50, we're all good. But I do get concerned when I see a share price move higher and it's not confirmed by the RSI. That's a bit of a divergence. File it away. Appreciate the fact that it's out there. I think that the uptrend should still continue. So I wouldn't go selling it on those observations. I think that the share price will more than likely move higher. So I'm bullish on WKHS. RMTI, Rockwell Medical Technologies. So we were in a downtrend. Last week that downtrend ended. The problem is that while we were able to close above the upper band of resistance, which should now act as support, we closed well off the highs of the week. Now, that's expected. It found resistance near the 50-period moving average, which is still in decline, so it acts as a declining ceiling. What would be really good for RMTI would be a pullback and a retest of this breakout point. That may take a couple of weeks to do. But if you get that, it sets the stage for a continuation move higher. And plus, you have a retest of a breakout point, which implies that this breakout's for real. And the shares will more than likely move higher. We had a nice double bottom setup several weeks ago. So a good base off of historical support. Stokes look good. So the chart looks good. I would just want to see it again, consolidate and then move higher. So I would buy it on a retest of this breakout point. It could be at $8.50. So you still have some downside potential here. Let's go to a daily chart. All right, so daily chart, we were in a triangle formation. We broke out. And this is exactly what we're looking for on the weekly chart. This is a microcosm. We rallied up and into the 200-period moving average, and we pulled back. What did we do? We retested the breakout point, and it held. Volume was light, rolling over an ultimate oscillator. So we may get a little bit more volatility on RMTI, a pullback to the downside, a consolidation along this solid blue line, this breakout point, which should now act as support. So it's looking good. But I just wouldn't be a buyer just yet. Murphy's Oil, weekly chart. Beautiful chart. It's overbought. The uptrend I would expect to continue. When would I be a buyer? On a pullback and a retest of this lower band of support. You are trading up and into, and sellers moved in. We're trading up and into the upper band of resistance. We're trading above the 2 standard deviation Bollinger Band in green. And we found resistance at the 3 standard deviation Bollinger Band in red. Wait for a pullback. I wouldn't buy this just yet. I think the chart looks great, but the time to buy it is right here when we retest this lower band support at, let's call it $34 per share, $33.50. So the chart is looking good. We have resistance up at $39.80, so expect sellers to move in. Opco Health. Daily chart, we have a potential bull flag formation. Would I buy it now? No. I would open a position on a breakout and a close above this upper band of resistance here. I would add more on a breakout above this primary downtrend channel. Note how we put in a lower high. So the last thing that you want to see is a breakdown below these support levels, because if you have a lower high and you begin to break down below prior support levels, that means that you're putting in lower highs and lower lows. You don't want to own that stock. You want to buy the shares on strength. Note how RSI broke down below the lower band of support. It was in an uptrend. That uptrend has stalled. Volume's been light, which is good. Both lines on Stoke, daily chart, are trading At the 50 level, the red line, the slow line is trading slightly below, with the black line, the fast line, significantly below. You don't want to see that. You want to see these lines hook up and hook up quickly. So OPCO, I wouldn't buy. I would buy on strength. I would buy on a closing breakout. Netflix, weekly chart. I think Netflix is setting up as a short. I think that we have a lower high being put in. If we break down and close below $85 per share, I think we're going to $79.95 in a heartbeat. If we break $79.95, we're going down $10 probably within a few trading days, because that would be a confirmation breakdown. Lower high and now lower lows. Netflix, I'm very bearish on. I would not buy these shares, and I'm looking to short it. Lower highs, all over the place, lower highs. Bad stuff. Avoid the shares. Longer term, shorter term, is there a trade to the long side to be had? Let's go to a daily chart. We may have a trade to the long side. Let's annotate this chart. So while I'm doing this, we need to appreciate why Netflix is going down. They had disappointing numbers, and Amazon is eating their lunch coming into their marketplace. And this is what I've always worried about. Amazon Prime gobbling up market share on Netflix. Now, for a short-term trade, we are in a very tight descending pennant formation, wedge formation. We found support at the lower band. If we break out above this upper band of resistance, Netflix is a short-term swing trade to the long side. I think that once we get up to $97 to $98 per share, I think that you can begin shorting Netflix in anticipation of a continuation breakdown. So I would not go shorting Netflix on Monday morning. I think that we might get a rally, but that rally is to be sold and shorted into. And then you can add to your short position on a breakdown below Friday's lows. Add more on a breakdown below $79.95. Next chart up, Facebook. Weekly chart. The uptrend continues. They blew away numbers, very, very strong earnings. This is certainly not a short. It's a potential buy. It's a buy on a breakout above last week's highs, which was 120.79. Volume was good. Indicators are looking really good. The question is, can Facebook withstand a breakdown in the market? So as it stands right now, Facebook is looking strong until we break down below 105. You see a breakdown below 105, that's the market telling you that Facebook is going to trade along with the market, perhaps go down to a lesser extent, show relative strength in a declining market, but that doesn't necessarily mean it'll be trading higher. It could trade lower with the market, yet if the market's down 10%, Facebook may be just down 5%. So it'll still be outperforming the market. And how would I trade for Facebook? You know, there are so many better ways. We're currently short the triple Qs. I wouldn't short Facebook. This is not a stock that I would want to short. Strong fundamentals. If anything, I would want to buy it. So there are far better stocks out there to short in the social media space. So Facebook, if anything, would be a long. Okay, next chart up is Apple. I spoke about Apple a long while ago. It was showing signs of weakness. We put in a lower high during the week of July the 20th, 2015. So this is a stock that was breaking down a long time ago. It put in a lower high, confirmation breakdown the week of August the 3rd. And ever since, we've been putting in lower highs and lower lows. I see no reason, especially after earnings, that the trend to the downside should not continue. We did manage to break out an RSI several weeks ago. Now we have a bull trap, breakout point failure. We're going lower. Volume was very strong to the downside last week. If anything, Apple on a breakdown below this blue lower band of support is a short. Not my favorite short, but it's a short. CYBR, CyberArk, really nice day on Friday. A bullish key reversal after a bearish day on Thursday at resistance. It is in a downtrend channel. Here's your upper band. Here's your lower band. We close above 41.30. CYBR is a long. The chart is setting up nicely. I like CyberArk. I would just be careful of earnings. I'm not sure if they reported them yet. I would not buy any stock into earnings unless it was at extreme oversold levels. And this is not at extreme oversold levels. And that's it, folks. If you're not currently a member, again, 14-day free trial offer. If you want some free trading lessons, please enter your email address. Again, we hate spam too. You will not be spammed. And follow me on StockTwits, Twitter, YouTube, and give me a like on Facebook if you would. Everybody have a profitable trading week. Members, let's roll into the week ahead commentary. We'll discuss Market Pulse Check, which is a review of the overall markets, and the last topic will be our current positions and what trades we are really looking to put on early next week. So let's get to it. Okay, members, let's kick things off with a chart of earnings. How are earnings rolling out for the most recent quarter? Well, in Candlestick, you have gap earnings, and you can see that they gap down for this quarter. Very, very poor stuff. Now, earnings topped out April of 15. That's over a year ago. Yet the stock market since July of 15 has shrugged it off. Now, why is this different from past history?